Hey everyone, Chad Pavel, Connecticut CPA here. Today I just want to talk about our latest blog post and give you a summary why summer is the perfect time for small business owners to optimize their taxes and maybe even to find a new CPA. And so we're going to be talking mainly to small business owners in Connecticut, New York, Massachusetts, New Jersey, the Northeastern corridor, which is where we're located. Really, because summer often brings a welcome slowdown after tax season, holiday season. Many people are starting to ramp back up their businesses in the spring and summer. Many people are starting to slowly wind them down or slow them down. And so many times just taking a few minutes to think about your tax situation and how well or how poorly this tax season went for you as a small business owner could be the right time to start thinking about your taxes a little bit differently. So that's what the title here and the first couple paragraphs get into, is just how we as a CPA firm really stress to our clients that we need to be providing value every quarter, even every month, every time we talk. And one of the easiest ways is for us to meet with clients or prospective clients in the summer to review last year's taxes, to review this year's progress towards their revenue and their profit goals, and then certainly take a look at their tax situation. What we often find is that business owners who are taxed as single member LLCs or as partnerships might be better off tax-wise becoming taxed as an S Corp or maybe even a C Corporation. You might find that there are a number of different things we find during our mid-year tax review that can immediately save you $10,000, $20,000, sometimes even more. We talked about the entity structure. Most of the time what we're seeing is that a single member LLC or a sole proprietor starts making a net income of $200,000, $300,000, $400,000, $500,000 or more, and they still have never considered electing S Corp taxation. That is very popular and common, and the easiest ways or the quickest ways to slash tens of thousands off your tax bill. Then we get into bookkeeping and just keeping good, accurate financial records every month, because without good, accurate, up-to-date financial statements, bookkeeping records, nobody knows, including us, how well your business is really doing. We don't know where we can actually go and save our clients money. So that's why just about every client of ours who we're performing regular tax advisory for, we're also doing some form of bookkeeping or accounting at least every quarter, many times every month, and for a number of clients every week. And that includes reconciling the accounts, categorizing the expenses properly, looking at backlogged transactions and catching up if the client hasn't done those in a while, identifying missed or misclassified accounts to find tax deductions. So once again, most of our Connecticut clients want us to do some sort of monthly, if not quarterly, review of their financial statements and of their books. Now, once we meet with clients at least every 2 to 3 times a year, 4 or 5 times a year, we then start to see opportunities to help them plan their capital investments. What that is of course helping them make purchases, investments in their business for equipment, sometimes real estate, sometimes big inventory purchases, sometimes remodeling a property in line with the tax benefits. Now, we are never the people who say, let's go spend $1 million to save $200,000 in taxes. That doesn't make any sense. But there are many instances where it does make sense to purchase a piece of equipment now or in December and put it in service, even if you don't need it until, let's say, January or February of the next year. Because there are ways that you can, A, save a bunch of taxes, and B, you need it anyway. Why not finance it now? Why not pay for it this winter if you need it early spring? Depending on the payment structure, the cost of the investment, many times taking the tax benefit now saves you 6 figures in a big purchase that you will then be purchasing anyway. So what we help clients do is time those capital investment purchases. And finally, this is a great time for a lot of potential clients, a lot of business owners, to review their tax situation, their CPA relationship. There's no secret. There are a lot of firms who have partners, owners who are not necessarily being super proactive. They're not even in the office every day. They're not really calling their clients anytime other than January or February of every year. They're not giving them those quarterly reviews. They're not giving them these proactive tax strategies. They're not meeting with them just for lunch to say, how's it going? How's business? Let me see if I can help you introduce you to this client or this customer or this potential revenue source. That is what we do. So if you'd like to have someone take a second look at your business structure, your tax situation, your bookkeeping, your bill payment system, your payroll, give us a shout. You can see a link all over the website. And if you see this video on social media, there will be a link below. So look forward to speaking with you soon.